You have told yourself you will start saving when you make more money. It sounds reasonable. It is also exactly backward. And it is the reason people who get raises and promotions often find themselves just as financially stuck 2 years later as they were before. The real problem is not income level. It is that saving is a behavior pattern, and behavior patterns do not automatically install themselves when income crosses a threshold. They have to be built deliberately, at whatever income level you are at right now. Here is the specific daily habit that builds that pattern, and why it works even when the dollar amounts feel too small to matter. Welcome to Daily Money Mindset. Let us start with the identity piece, because this is the part that makes the habit stick when willpower alone cannot. There is a significant difference between someone who is trying to save money and someone who identifies as a person who builds wealth. The first person is fighting against their existing identity every time they try to make a good financial decision. The second person is simply behaving consistently with who they already understand themselves to be. This might sound like a subtle distinction, but it is not. Identity is one of the most powerful drivers of consistent behavior, and financial behavior is no exception. The identity shift does not happen through an announcement or a decision. It happens through accumulated evidence of small actions that confirm the new identity over time. Every automated transfer, however small, is a data point that says you are someone who moves money intentionally rather than someone who spends whatever remains. Every time you check your savings balance and see it is slightly higher than last month, you are reinforcing the identity rather than undermining it. The habit we are building today is specifically designed to generate this evidence consistently, at whatever income level you are starting from. The core habit is what financial behaviorists call a micro-automation, an automatic transfer of a specific small amount from your checking account into a savings or investment account, scheduled for the same day your paycheck arrives. The key parameters are that the amount should feel genuinely comfortable rather than aspirational, the timing should be same day or next day after deposit, and the destination should be a separate account from your primary checking, so the money becomes slightly harder to access. The amount does not matter as much as the consistency. Transferring $25 every payday for a year is worth dramatically more than intending to save several $100s and doing it sporadically. The small amount is a feature, not a limitation, because it removes the barrier to starting and keeps the habit sustainable indefinitely. There is a compounding effect to this habit that goes beyond the dollars accumulated. Once the automation is running and the identity of someone who builds wealth starts to form through repeated small evidence, your relationship with every other financial decision quietly begins to shift. You start making choices that are consistent with that identity more automatically, because your brain works to maintain consistency between identity and behavior. Spending decisions that conflict with the identity start feeling subtly wrong in a way they did not before. Not because of willpower, but because of the identity friction that builds over time. The pay yourself first principle that underpins this is not a new idea, but its power is consistently underestimated because people apply it wrong. The most common mistake is treating pay yourself first as a rule to follow when you feel financially stable enough to afford it. Applied correctly, it is a non-negotiable default that happens regardless of how the rest of the month goes, at an amount small enough that it genuinely cannot destabilize your other obligations. The month you most feel like skipping it is the month the habit is most valuable to protect, because that is the moment the identity is being tested. The second component of the daily wealth-building habit is a 1-minute daily money check. Not a full budget review, just a 30-second look at your savings balance and a 30-second acknowledgement of one financial decision you made that day that was consistent with your wealth-building identity. This is the journaling equivalent for behavioral finance. It sounds trivially small, and it is. That is exactly why it is sustainable when longer review processes are not. Let us address the objection that comes up immediately for anyone on a genuinely tight income. What if there is truly nothing left after essential expenses? This is a real situation, not an excuse, and it deserves a real answer rather than generic motivation. The answer has two parts. First, the automation amount should be set at the level where it is genuinely invisible rather than a strain. For some people, that is $50. For some, it is $10, and for some, it is $5. The amount is not the point at this stage. The habit and the identity are the point, and they compound regardless of the starting dollar amount. Second, the habit itself changes your relationship with spending in ways that tend to surface savings opportunities you genuinely could not see before, because you were not looking from the perspective of someone who moves money intentionally. There is also a category of micro-habit worth building alongside the automation, which is the rounding habit. Every time you make a purchase, mentally round it up to the next dollar and log the difference as a micro-transfer. Several banking apps and standalone tools automate this by rounding every transaction and transferring the difference into savings automatically. On individual transactions, the amounts are cents. Over a month of normal spending, they add up to meaningful additional savings with zero conscious decision required for each one. The psychological effect of seeing those small amounts accumulate is disproportionate to their dollar value. They make saving feel like something that is happening with you rather than something you are trying to force against your natural tendencies. The milestone framework matters for this habit because the identity shift requires visible evidence of progress, and progress needs to be acknowledged in order to reinforce the identity. Set 3 specific milestones in your wealth-building journey: a first $100 saved, a first month of unbroken automation, a first investment account opened. When you hit each one, mark it deliberately rather than simply moving past it. The acknowledgement is not vanity. It is the feedback loop that keeps the identity building instead of slowly fading back into the old pattern. Now let us talk about what happens at the 6-month mark for people who stick with this habit, because understanding the trajectory helps you stay through the period where the amounts feel small and the identity is still forming. At 6 months of consistent micro-automation, 2 things have typically happened. The savings balance, even at small weekly amounts, has reached a level that begins to feel like a genuine cushion rather than a symbolic gesture. And the identity of being someone who builds wealth has accumulated enough behavioral evidence that it starts to feel genuinely true rather than aspirational. These 2 shifts together tend to trigger a voluntary increase in the automation amount, not because someone told you to, but because the identity is now pulling behavior in that direction on its own. The income threshold myth is worth naming directly one more time before we close. Waiting until you make enough money to start building wealth is a version of the scarcity belief we covered in a previous video. The assumption that your current state is the fixed reality rather than the starting point. Every person who has built meaningful wealth from a low starting point did so by starting the habit before the income was there to make it feel easy, not by waiting until it felt easy and then starting. The habit creates the capacity. The income provides the fuel once the capacity exists. If you are ready to start today, regardless of what your current income looks like, hit the like button and drop a comment below with the dollar amount of your first micro-automation. Any number, no judgment. Subscribe to Daily Money Mindset for 3 videos every week on the habits and strategies that actually build wealth from where you are right now. A free micro-automation setup guide is linked in the description below.